Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we're going to be looking at three companies. We are looking at these companies based on their technical analysis, not based on their fundamental analysis. So before we begin, I would like to ask those who haven't subscribed to please consider subscribing. And if you find value in this video, please make sure that you smash that like button. If you have any comment or suggestion, please leave it in the comment section. We appreciate those comments that are coming from you guys. And also, if there's a company that you would like us to look at its chart, make sure that you leave that on the comment section as well. So the first company that I want us to look at today is DraftKings. So for those people that are not familiar, DraftKings, it's a company that is involved in sports betting, among other things. So what we like about this company, we've been observing this company for quite some time. As you can see that the stock has been on a downtrend before the beginning of 2023, and then you can see here it sort of bottomed somewhere just around $10 per share. But what was interesting, we saw that there were several attempts to reclaim this key level here that started to happen in August 2022. But the one that was more important is that reclaiming of this level that happened around February 2023. Since then, we can see that the stock is nicely on an uptrend. So we have been having this position in our portfolio for quite some time now. The problem is that the stock was not moving as fast as we wanted it to move. As you can see, the stock broke above this resistance level in here. Then it went up before it started to stall around this resistance level. So we've been holding this stock like I said, we've been holding this stock for quite some time. I don't remember whether we bought it at this breakout level or we bought it somewhere here. But now what is important with the stock is that it has broken above this resistance level where it has been sitting for a while. You can see that the stock has been trying to break above this $26 level since somewhere around June 2023. And then we see that on Friday it attempted to break above, and then yesterday it broke above this level. What is more interesting with this breakout, you know that in our videos we always make a comment on the volume whenever the stock breaks above a certain resistance level. So what we see here, we see this nice breakout happening with that decent amount of volume. So this is a bullish signal to us. So we expect DraftKings to continue moving up. How high is going to go, nobody knows. But if you took this position, then you need to have a stop loss somewhere just below that resistance level, because there's no guarantee that the stock is going to continue to trade high. The stock can just easily come back to that breakout level or even break below that breakout level. So it is important that you ensure that you protect your principal. But as things stand, we are happy with this position. Now, based on this analysis, another stock that caught our interest is Riot. Riot is another internet company that is based in the US. So it's something similar that we observe. The stock tried to break above this level here. You can see around early April. That is when it had the success to start trading above this level. So you can see it moved up before coming back to retest again at this level. And then what happened recently is that the stock broke above that previous high, somewhere around $13 per share. But you can see that an upward move has happened over 2 days, and in those 2 days you can see that it had a decent volume. Remember, we are looking at the daily chart. The time frame is important, because depending on the time frame that you are using, you are definitely going to see different things. But as things stand, we're not gonna chase a Riot. We don't have a position on Riot yet. For the people that bought before the breakout, then they are sitting at a nice profit there. So now what is the plan for us? We will be monitoring a Riot. It's going on our watch list. We are looking to see if it can come back to retest this level. If it does retest this level, then you can buy it using a buy limit order if your broker has a buy limit order. But if you miss that pullback buy there, then you can wait for the stock to come back to reclaim whatever that is going to be the next potential resistance level, because it can happen that the stock can just continue to trade higher without retesting this breakout level. Another scenario is that you can see the stock going up as it is moving, and then maybe with a brief consolidation, then you see that a nice support and resistance during that consolidation. Then you wait for the other breakout to happen, then you buy there, and then you set your stop loss just below that resistance level. So at this moment we are not chasing Riot platform, but it is on our watch list. It's a stock that we are looking at. The people that bought somewhere around $5.70 or $6, they are really sitting at a nice profit. So now if we are not chasing Riot, what is it that we are chasing? So a stock that caught our attention recently is NIO. For those people that don't know, NIO is involved in the electric car business. For quite some time we were bearish on NIO. We have released several videos where we covered NIO, why we were bearish at that time. You can see that the trend was down, and then there were times where the stock it tried to bottom before breaking below that resistance level. Again, that was another potential bottom of which the stock has broken below these bottoms. So now, why are we interested in NIO? Obviously, we've been talking about this key level here. We can see NIO is breaking above this key level here, and more importantly, when it happened, we saw this above average volume there happening there. So at this moment, what we are going to do, we are going to place a market order. We're just gonna buy when the market opens. We're not even gonna wait. If you measure the distance from the ideal buy area to here, which is the pre-market, it is about 7% above the an ideal buy area. But we're not saying that this is going to be a long-term position. It's not about that. What is more important is that even if we buy at the current level, here you can see it's about $11 pre-market, you can still set a stop loss just somewhere around $9.35 with the anticipation that the share price of NIO is going to continue to trade high. So the way that we are thinking of it, we are thinking of buying at the current level with the stop loss just somewhere around $9.20, with the expectation that the stock at least it can reach this level of about $22. But you can see we still have this level here where the stock is still supposed to break above this level. You can see whether this let me try to put in a straight line so that you can see if that level is straight. But remember, whenever you plan your trade, you need to ensure that you see all the potential resistance and support level, because the price is going to stall a bit whenever it comes. So this level, it's around $13 per share. Once NIO crosses above, let's say maybe $13.60 per share, then it's possible that NIO can come and retest these previous highs here, which are somewhere around $23 per share. So if that move does pan out, let's see what could be the potential risk to reward if it does reach the full target of about $23 with a stop loss somewhere around 9 stop loss. So our entry is going to be here around $11, and then our stop is going to be somewhere just below that. I don't know why I'm struggling to draw this thing correctly. So yeah, you can see we have our potential stop loss somewhere around $9.34 and the potential entry at around $11. Then we are targeting that high somewhere around $21 or so. Then you can see the risk to reward, it's about 6.5. So in terms of risk management, this is a trade that we see that it is as we're taking asymmetric risk. We are taking a trade where there's a potential to lose $1 when we are trying to make about $6.50. So in terms of risk to reward, that is a beautiful trade. It's something that we can take. However, there's no guarantee that the share price of NIO is going to climb until it reaches that level. That is why we always have a stop loss, because the stock can just quickly tumble, and when it tumbles, we don't know whether it can still go below that $8 region there. So we just want to ensure that if the stock does reverses, we don't lose a lot of money in this. So this is how we trade. All our trade decisions are informed by the use of technical analysis, and an ideal scenario is that you buy a stock during a breakout with a big volume, and also ensuring that you are taking an asymmetric risk to reward. So once again, if you found value in this video, please make sure that you smash that like button, and if you haven't subscribed, please consider subscribing. If you have any comments or suggestions, make sure that you leave them in the comment section. We will see you in the next video.